Hey guys, just updated the sheet here. The Trololo Trendline sheet. Crypto has continued to go up from a low 2 months ago or so. We're now June. With the 4th of June, we're at 270 billion market cap. 274. I calculated until yesterday. It was yesterday 270, today is 274, but the day of today is not finished, and I do need average prices for the day when I calculate the sheet. So interesting was that I updated the trend line also because it was like almost a month ago, and this used to be 382. So a month ago, the trend line was at 382. Then I added the new price data of the past month. I recalculate the trend line, and the trend line, as usual, drops down a bit. But it means that actually fair valuation a month ago was 384. Today it's 378. So fair valuation went down the past month. That's the first time I noticed that happening, because I always say the trend line only goes up over time, and that actually is not true. The trend line can go also down. Fair value can go down over time, which is of course bad news for crypto investors. So fair valuation is a little bit lower now, but actual real valuation has continued to go up over the past 2 months, and it's now at 270 billion. So that means that we're about 30% undervalued compared to the trend line. But yeah, it is likely that we will go back to not 30% but 60% undervaluation over the next year. And we will hit that many times, is likely, huh? Just like we saw here, a sideways movement parallel to the trend line, and here in 2011 also 2015, it's likely that we will see a sideways movement parallel to the trend line, but considerably below it. And we haven't seen that yet, actually. But I did lower the odds for that to happen. I used to be 60%. I just lowered that to 55 because I have to stay. The risk is always here that you keep on thinking it will go lower and lower, and you keep increasing these odds or probabilities that will continue to go lower. That's very dangerous, and I have been again guilty of that. So that's why I corrected that. Because if you look back, for example, testing bottom, I had at 66% chance at the time before it happened. That was a fair estimate, huh? But I mean, a lot has happened, and I think, for example, if I put this at 60%, that's too close to the. This scenario is much more likely, I think, than this scenario, because we saw a serious crisis, and we're still in it, where the economy was put to a halt, literally, and that does change society. And it's true that innovation does go into acceleration when you get such serious crisis. People change their attitudes, huh? And so innovation sectors like electrical vehicles, like cryptocurrency, like video on demand, Netflix, or like conference calling, Zoom, all these things pick up a lot. It depends also what kind of crisis you have. And actually, we don't have a currency crisis here, but well, people have been locked at home, and what can they do? We saw that there was a serious uptick in actually investing, retail investing in the stock market, probably because actually many games and gambling options were not available anymore the past 2-3 months. And so they started basically more gambling on the stock market. But it also has an influence on crypto. People know the existence of crypto, so it will attract more investors in the cryptocurrency world. And of course, as with most big crises, you have massive amount of fiat printing, and that also is less and less. People become more aware that that costs to the people that hold the currency, that hold the fiat currency. They pay the bill of that, and so the only solution for that is to use cryptocurrency instead of fiat currency. So that all helps, and so the odds or the chance for the past pattern to break has gone up. It's true that it is very likely that past patterns continue over time, but the pattern that we counting on here, that we have a higher undervaluation every cycle, I mean, it's a risky thing to bet on, even though that's been the past pattern. I mean, that does it's a very bad sign for crypto actually. Like, overvaluation should go down over time. As market cap go up, you should have a less volatile environment where you have less overvaluation every bubble. That's logical. But that you also have more undervaluation in every cycle is actually not logical. You should have also here a pattern where actually you have more undervaluation in the beginning, and then you have less undervaluation over time, because yes, you're in a higher market cap, and that should be the pattern. So this shows that crypto is not well growing according to past growth, but you cannot continue, you cannot extrapolate past growth into the future. Even if you take into account the declining growth rate, that as we do here, and you extrapolate the declining growth rate over time, then still the actual prices are underperforming, and you always have to pull this down basically more and more. This red growth line is getting pulled down more and more, which is should not be the case. And so that you can try to explain why that has happened. I think the explanation is simple. I think that early growth rates were fantastic because there was unlimited growth possible for Bitcoin, the leader. There was no limit put on the amount of growth it could have technically. More and more transactions were able to be transferred through the system, but they put an actual real limit on that 2-3 years ago. And of course, in combination with other severe mismanagement, such as no innovation whatsoever by the main leader, Bitcoin. Yeah, I mean, that makes, of course, and also the rhetoric, the ideology of freedom, economic freedom for everybody, was stopped being promoted by the market leader. And so, yeah, I mean, it's a little bit like the leader in electric vehicles, Tesla, starting to really change its it's like starting to make much less competitive offerings in the electrical vehicles that they put on the market. That's of course going to harm the EV movement a lot. If the market leader starts to really underperform, then even if you have competition, this competition is much less known, and what the people mostly see is the market leader basically fucking up, and that will slow down the growth of the whole industry. I think this explains why we have seen higher undervaluation over time compared to the trend line. But of course, as competitors become more dominant and start to really become the new leaders, then this pattern should break, and we should not see higher and higher undervaluation over time. And actually, we may have come to that point here. Even though Bitcoin Core is still the absolute dominating the sector when it comes to market cap, it's not dominating the sector anymore. When you look at the insiders in the industry, they look beyond Bitcoin Core. They have no hopes for Bitcoin Core anymore, and they are not investing in it. They're not building on top of it. that's not what's happening. Huh? So um, I mean, sooner or later this pattern will break, and so to continue to count on the pattern to continue becomes more risky over time. And of course, with this kind of crisis that we just saw, also lowers the chance. So that's why I lowered the chance to from 60% to 55%. That we will continue, that we will see that again, not at least once, a 60% undervaluation. I have lowered the chance to 55%. It's still a majority chance, but it's not a big majority. Um, that's the first. But of course, that lowers the amount of recommended allocation, because the chance to go there is a little bit lower. If you had it at 60%, Kelly recommends basically 26% allocation today. But if you lower it to 55%, Kelly recommends 30% allocation today. Um, but yeah, it means for me that I should not increase my exposure. I'm always tempted to buy more Bitcoin Cash because I think the price is relatively low at current $250 or so. I think that's still cheap, but yeah, following the plan, this is actually what the probability that we go lower is a very big element in the Kelly calculation to estimate the allocation. Like if you still have a high chance to go lower, Kelly does not recommend a high allocation. It's only when you have a very low chance to go lower that Kelly recommends a very high allocation. And we're not there. We're not there. We really, like, since there is still a majority chance that we go to 60% undervaluation, you can't allocate high yet to crypto, sadly, and have to wait for that. And even if it doesn't happen, like if you follow the Kelly criterion, yes, we take into account there's a 45% chance that we do a 10x from here, and for Bitcoin Cash, a 40x from here. But that doesn't change anything to the recommended allocation, because for Bitcoin Cash, it's the same story as for general crypto or even for Bitcoin Core. They all have the same chance to go to 60% undervaluation. And yeah, that means that Kelly recommends for all of them to have a uh, recommended allocation about 40%, but you don't want to do full Kelly. I don't think that's wise right now. Certainly not. Of course, if you do a big correction, and you would reach back to 150 billion, for example, and that's indeed then 60% undervaluation, then this has to be this. Then I would still recommend only 70% Kelly, but in that case, I mean, if you go to full Kelly, yeah, you can take that chance, but certainly not today. But I would still recommend 70% Kelly only there. I increase it with every step if we reach it. But actually, since actually 20, I only estimate 20% chance that we double test the bottom, that we go back to 110, 120 billion that we just saw 2 months ago. I think has a very low probability. And therefore, like, actually, this is the last chance where I think that you have a high chance to reach this level, 60% undervaluation. And if we reach this, then actually, yeah, I think you can invest strong and you could play with this number and push it upwards. Yeah, I don't know what else to add. Yeah, I cleaned up this sheet, the crypto investment plan. These are two different sheets, but they link to each other here. Trololo Trendline, you click on this one and you go to this sheet. But I update this one and simplified it and cleaned it up a lot. I like it very much. You have the achieved targets from the past, and you have the future targets here. and the chances that I gave it at the time that we would reach those targets, the recommended Kelly allocation. But yeah, for example, in the past here, actually, when we tested the bottom, my system here on this sheet recommended the higher allocation, but yeah, I removed some things. Like now it's I only showed recommended Kelly allocation, but before I also had a recommended allocation based on undervaluation and based on MRV ratio, and I took actually the average of that, and that was actually recommending 64% allocation. It's also mentioned in the comments. When I took the average of all that, but yeah, I removed that. I want to keep it simple here, and I think it was wrong actually. So I mean, when I look back, like should I buy today more crypto? I am only 40% exposed, but actually, I went to a 64% exposure right here when it was actually I did that here around 150 billion, not under 20 billion. I was only very short. Around 150 billion I did that, and actually the recommended allocation there was only 22%. I went to 64%. But okay, the same day we reached this, so the recommended allocation was 50%. I went to 64%. Okay, and I think it's wise to, when you buy these things, you should not sell them again. Huh? This is to build your position, not to sell it. You only sell when you see this overvaluation, which is far off. Um, but um, but I should certainly buy more, because actually you improve a system over time, and actually the system I have now shows me that I overinvested here. Huh? I went to 64%. I should only have gone to 50%. It worked out to my benefit because price went up since then, but that is not a given. Huh? And that's just my luck. So yeah, I spent Bitcoin Cash quite a lot, made many investments and donations, and so yeah, I'm down on my Bitcoin Cash position. So that's why I'm thinking: should I buy this? Should I spend and replace or not? And actually, since I'm an investor, I think it's good if you only focus on crypto. Then it's wise to spend and replace. But in my case, I actually invest when the getting is good, and then I spend, but I don't replace it. I only replace it if there's another opportunity to buy cheap. Huh? So yeah, but also since I overinvested, actually it certainly is not justified to invest more. I'm now at 40% crypto, of course, not mainly not because I spent many of it, but because of course my other investments went up a lot, Tesla and my calls. Huh? But yeah, that does give me a chance to bump my crypto exposure. But even that is not justified currently, considering the valuations. Even if you take full Cali, it's only 40% justified, and that's what I have. Huh? And if you take like 70% Cali, which is much more reasonable, I believe, you only should have 30% crypto. So I'm way above that. So yeah, it's always good for me to use these sheets and charts, because otherwise I'm always ending up wanting to buy more crypto, and this always brings me back to planet Earth to keep my FOMO feelings in check. Thanks for watching.